Hey everyone, and welcome back to the Binance Academy. I'm your host, Kat. I'm super excited because today we're re-diving deep into one of the most powerful platforms out there, Binance Futures. This isn't just another trading tool. It's transforming how millions engage with crypto markets, opening up incredible opportunities. Whether you just dipping your toes into futures for the very first time, or you a seasoned trader looking to sharpen your strategies, this guide is built for you. We're going to walk through every essential concept and practical step so you can confidently navigate this dynamic landscape. So, let's kick things off with the absolute fundamental question. What exactly is Binance Futures? And why has it become such a crucial tool for modern traders? At its core, Binance Futures is a super sophisticated cryptocurrency derivatives marketplace. And here's the kicker. It operates fundamentally differently from spot trading. Where you buy and sell actual crypto? Forget that for a second. With futures, you're not actually buying or selling the cryptocurrency itself. Instead, you're entering into what we call derivative contracts. Think of these as financial agreements that simply track and mirror the price movements of cryptocurrencies. It's like you're placing a bet on the price direction rather than owning the actual asset. This distinction is absolutely crucial because it unlocks entirely new avenues for profit. Whether the market is surging upwards or taking a dip. The real beauty of futures trading lies in its incredible flexibility and capital efficiency. Imagine this. Instead of needing thousands of dollars to directly purchase a whole Bitcoin, you can gain exposure to Bitcoin's price movements with just a fraction of that capital. How? Through leverage. Essentially, you're entering into a contract that says, if the price moves in the direction I predict, awesome, I profit. But if it moves against me, well, I incur losses. This powerful mechanism allows traders to participate in the cryptocurrency markets with much more strategic capital allocation, making every dollar work harder for you. Now, let's talk about the two fundamental market positions you can take, and these are super important to grasp. First up, we have going long. When you go long, which means you buy a futures contract, you're essentially placing a bet that the price of the underlying asset will rise. You enter into an agreement to purchase that cryptocurrency at today's price, holding the contract with the firm expectation that its value is going to shoot up. When it does, you can then exit your position, and voila, you pocket the difference as profit. Pretty sweet, right? Conversely, there's going short. When you go short and you sell a futures contract, you're making the exact opposite prediction. You're selling the cryptocurrency at today's price, but with the anticipation that its price will actually decline. Once it drops, you can then buy it back at that lower price. And guess what? You keep the difference as your profit. This amazing ability to profit from both rising and falling markets is precisely what gives futures traders a significant, dare I say, powerful advantage over traditional spot traders. It truly opens up a world of possibilities for maximizing your trading strategies. However, and this is a critical point, we absolutely must address futures. Trading carries substantial risk, especially when you start incorporating leverage. That same powerful mechanism that can amplify your profits can, just as easily magnify your losses. The crypto market is notoriously volatile, with prices often making dramatic moves in very short periods. You need to be prepared for that. Liquidation is a very real possibility. This means your entire margin can be wiped out if the market moves significantly against your position. It's why professional risk management isn't just an option here. It is absolutely 100% essential. Successful futures traders aren't just good at predicting market movements. They also have incredibly disciplined strategies for protecting their capital. Throughout this guide, we're going to keep emphasizing these protective measures because preserving your capital is just as important, if not more so, than making profits. With this solid foundation in place, you are now ready to understand how to actually get started on the Binance platform and begin your exciting futures trading journey. We've laid the groundwork, and the next steps are all about practical application. Thank you so much for joining me on this deep dive into Binance Futures. I hope this has been super helpful in demystifying this powerful trading tool. If you enjoyed this video and want to see more content like this, please hit that like button, subscribe to the Binance Academy channel, and ring the notification bell so you never miss out on our latest insights. Happy trading, and I'll catch you in the next video. Hey everyone, and welcome back to the channel. Today we're diving deep into something truly exciting and potentially game-changing for your trading journey. Binance Futures. If you've been curious about futures trading or looking to step up your game, this video is for you. We're going from zero to hero, covering everything you need to know to get started safely and effectively on Binance Futures. So, buckle up, hit that like button, and let's jump right in. First things first, if you don't already have a Binance account, that's your absolute first step. Head over to Binance.com, sign up, and get ready to unlock a world of trading possibilities. Once you're logged in, you'll want to switch to Pro mode. This isn't just a fancy name. It's essential for accessing all the advanced trading features, especially for futures. On your home screen, look for the toggle to switch to Pro mode. Then, finding the Futures section is super easy. You can tap the Futures button usually found at the bottom of your screen, or go through the More menu and use the search function. Either way, you'll land on the Binance Futures marketplace. Now, before you get too excited and start placing trades, there's a crucial step that acts as a beneficial gatekeeper: account activation. Binance requires you to activate your futures account by completing a comprehensive quiz. Seriously, don't just rush through this. This quiz is designed to test your understanding of futures trading risks, leverage mechanics, liquidation risks, and margin requirements. It's there to protect you by ensuring you genuinely understand what you are getting into. Once you successfully complete it, your futures trading access is officially activated. This verification is a core part of Binance's commitment to responsible trading, and it's a great practice to ensure you're well informed. Beyond the quiz, you should also complete identity verification, known as KYC, or Know Your Customer. I know it might sound like bureaucratic red tape, but trust me, it's your gateway to unlocking higher trading limits and full platform functionality. Taking just a few minutes to complete this process dramatically increases your trading capacity and gives you access to even more advanced features. Think of it as a worthwhile investment in your overall trading experience. With your account set up and verified, the next logical step is funding your account. Binance offers a ton of flexibility here. You can deposit fiat currency directly from your bank account, transfer existing crypto from another wallet, or even purchase crypto directly within the Binance app using various payment methods. The specific options will vary based on your region and preferred payment method. So take a quick look at what's available for you. Now here's a critical step many beginners overlook: transferring your capital to your futures wallet. Your funds might be sitting pretty in your spot wallet, but to trade futures, they must be in your futures wallet. This transfer is free, instant, and super easy. Just navigate to the Transfer Funds page, select your source wallet, typically your spot wallet, choose your cryptocurrency, enter the amount, and confirm. Boom. Your capital is now exactly where it needs to be, and you're genuinely ready to explore the exciting world of futures trading. But wait, before you place your very first trade, you need to understand the different types of futures contracts available on Binance. This choice significantly impacts your trading experience, so pay close attention. Binance offers two primary contract types: USD Stablecoin Margin Futures, or USDSM, and Coin Margin Futures, or COIN. These aren't interchangeable, and choosing the right one depends entirely on your trading goals and risk preferences. Let's break down USDSM first. These contracts are margined and settled in stablecoins like USDT or USDC. The huge advantage here is clarity and simplicity. Stablecoins are pegged to the US dollar, meaning 1 USDT is roughly 1 USD. This creates a super straightforward reference point for your profits and losses. If you make a 500 USDT profit, you instantly know that's about a $500 gain. This simplicity is fantastic for traders who want to focus purely on trading decisions without worrying about underlying cryptocurrency volatility affecting their margin balance. You know exactly what your gains and losses translate to in fiat value, which can be a huge peace of mind. On the flip side, we have Coin Margin Futures, or COIN. These are margined and settled in the actual cryptocurrency. Think Bitcoin, Ethereum, or whatever coin you're trading. This structure really appeals to traders who want to accumulate the actual asset rather than just hold stablecoins. Your margin, profits, and losses are all calculated and credited in the underlying cryptocurrency. However, there's a trade-off. your margin balance becomes exposed to the price volatility of that coin. For example, if you're holding BTC as margin and Bitcoin's price suddenly drops sharply, your margin balance decreases proportionally, which in turn increases your liquidation risk. This added complexity makes COINM contracts generally better suited for more experienced traders or those specifically looking for cryptocurrency accumulation. Now, let's talk about contract maturity, because Binance offers different variations within these categories. The most popular and beginner-friendly option is perpetual futures. These are contracts without an expiration date. That means you can hold your positions for as long as you want, provided you maintain sufficient margin and avoid liquidation. Perpetual contracts closely track the spot price of the underlying asset through a funding rate mechanism. This funding rate is periodically paid between long and short traders to keep the contract price anchored to the actual market price. This continuous exposure, without the complexity of expiration dates, is why perpetuals are overwhelmingly popular among traders. Alternatively, Binance also offers delivery contracts, which, as the name suggests, have fixed expiration dates. These settle on specific dates, and Binance typically offers quarterly contracts that follow calendar cycles. For example, a Bitcoin quarterly contract might expire on a specific date like December 25th, while these contracts can serve specific strategies. Perpetual contracts are generally recommended for beginners due to their simplicity and flexibility. Stick with perpetuals to start. All right, you've picked your contract type, and now it's time to place your actual trade. The interface might look a bit busy at first, but let's break down the key components you need to understand. First, you'll access settings where you can choose between cross-margin and isolated margin. This is a crucial decision for risk management. Cross-margin uses your entire futures wallet balance as collateral, essentially sharing margin across all your open positions. This can reduce liquidation risk because your full balance is working to protect your positions. Isolated margin, conversely, confines risk to a specific position's margin amount, limiting potential losses to just that individual trade. For beginners, cross-margin is generally the safer choice because it provides maximum protection against liquidation, giving you a larger buffer. Right alongside that, you'll adjust your leverage. Binance allows leverage ranging from 1x up to 125x on many contracts. However, and I cannot stress this enough, leverage is a double-edged sword. While it dramatically magnifies your potential profits, it equally magnifies your losses and accelerates liquidation risk. Most professional traders rarely use leverage above 5x to 10x. As a beginner, consider starting with a very conservative 2x or 3x leverage while you develop your skills and understanding. Remember, leverage amplifies everything, including your mistakes, so be incredibly cautious here. When placing your order, you'll specify the order type. Do you want a market order for immediate execution at the best available price? Or a limit order, where you set a specific price you want your trade to execute at? Limit orders give you more control. Next, you enter your position size. Here's where unit selection matters. You can specify size in the base asset like BTC, the quote, asset like USDC, or as initial margin. The crucial distinction is that base and quote, asset selections already include your leverage in the calculation, whereas initial margin selection calculates the final position by multiplying your input by your leverage ratio. You can also drag a slider to enter your position size as a percentage of available margin, and the interface will update your liquidation price in real time as you adjust it. This visualization is incredibly helpful for understanding your risk level before committing any capital. Understanding your liquidation price is absolutely critical. Your liquidation price is the exact price level where your margin, the actual capital you've deposited, can no longer cover your losses. At this price, your position automatically closes at a loss. The more margin you allocate to a position, the larger your buffer against losses, pushing the liquidation price farther from your entry point. This creates a much safer position. Always review the liquidation price before executing any trade. If it's too close to the current price, either add more margin or reduce your position size. After setting your order type, price, and size, you choose your position direction. Buy long if you expect the price to rise, or sell short if you expect the price to fall. Then, and this is absolutely essential, activate Take Profit TP and Stop Loss SL orders to automatically manage your risk. These orders execute automatically at your predetermined price levels, protecting your capital even when you're away from your device or distracted by market noise. Seriously, never enter a trade without these protective measures in place. After reviewing everything one final time, to ensure it all looks good, click your chosen direction to execute your trade. To monitor your positions, simply navigate to the Positions tab where you can see all your active trades, their profitability, and key metrics. You can adjust or close positions at any time, and the Orders tab shows your complete order history and transaction status. As you build experience with futures trading, remember these critical principles. First, avoid over-leveraging, regardless of how confident you feel about a trade. Second, start small with practice trades before committing significant capital. Get comfortable with the platform first. Third, use stop-loss orders as your non-negotiable safety mechanism. They are your best friend. And finally, consider exploring Binance's copy trading feature to learn from experienced traders by following and studying their strategies. It's a fantastic way to learn by example. Futures trading is powerful, offering incredible opportunities, but that power requires discipline. Always trade only within your personal risk tolerance. Never invest capital you cannot afford to lose, and continuously educate yourself through the vast resources Binance provides. You now have the knowledge to confidently begin your futures trading journey on Binance. If you found this guide helpful, please smash that like button, share it with your trading buddies, and subscribe for more advanced tutorials and trading insights. The most successful traders are those who prioritize education and risk management above all else. Welcome to Binance Futures, and happy trading.